Well, maybe. I don't know if you were in the market for a tiny stick shift car called the Nissan Versa. I have bad news. It was canceled in December. It was the last sub $20,000 car in America. Only the stick shift trim level, by the way.
I would pay extra for a stick shift, but not a Versa.
Car makers had been moving up market. You know, they're making more pickup trucks and the sort of higher level SUVs. So affordability was already a conversation. That's before gas prices shot up.
10-year spiked in terms of yield. Price went down.
The 10-year hit 4.4%, Jack. And so it's up over 40 basis points since this conflict started 3 weeks ago. And one thing that I always like to point out is when you look at the course of this bull market, so going back to 2023, really, whenever you've seen more than, I would say, a 10 basis point increase, which is essentially what we saw this week in the 10-year in a given week, and it's above 4.25, right? We're increasing on inflation expectations here. That's been a headwind for stocks. So we're in that environment right now where higher rates is not good for stocks, and that's something that's really starting to stick with investors, I think.
Yeah, there's a theory that while the stock cowboys do whatever they want to do, you got to worry when the bond investors get concerned that the bond market is smarter than the stock market.
So now, you know, last year investors were fine with this. Car stocks shot up. This year they're selling off. People have been wondering what's the effect going to be. This past week, car manufacturers started making the rounds and talking to Wall Street about sales trends. It was mostly upbeat. They say that there's still demand out there. It's been supported by higher income buyers, also older buyers. The average age of a new car buyer around 50 years old. That's up from 43 back in 2000. B of A says it'll probably take 4 to 6 months of higher gasoline prices to change demand trends. Barclays says General Motors looks good here. It's probably going to generate free cash equal to about 15% of its stock market value this year.
So oil's still driving the market to some extent, right? I mean, it's not like oil went lower in the prior week, but oil being elevated and the impacts of that, I think, is what the market is sort of dealing with right now. And this conflict really not going away, right? And so what you saw is the S&P 500 down again, NASDAQ down again. NASDAQ actually almost entered a correction, almost down 10% from a local high on Friday. What's weighing on that, Jack, is we got more bad news, right? So on Wednesday, you had a hotter than expected wholesale inflation reading. Then a couple hours later, you have Federal Reserve Chair Jerome Powell come out. He says, you know, that reading, it's not that good. We're probably not cutting rates anytime soon. And so that really drove the market action. That was when you saw a lot of the moves to the downside that carried through on Thursday and Friday, and a lot of moves in the bond market this week, Jack, catching my eye.
I get the feeling that, you know, investors look at the stock market. We always ask, how's the stock market going to react to this? But the stock market has been calm enough that I think, you know, investors and maybe voters are saying, well, let's wait. They're willing to look past a lot right now. When you see some sort of really adverse reaction in the stock and bond market, I think you might
be starting to happen right now, right?
Yeah.
It feels like maybe we're at the early part of that moment.
And for the consumer, they've only really felt it in the gas price right now. But when could that change, Teresa?
I mean, really, it's really building. So just a few weeks ago, we were talking about how higher tax refunds were going to fund shopping sprees at the mall. That's looking less and less likely as people have to fill the gap when they fill up their tank. We've seen retail stocks fall, but it's not just them. There's also airlines and cruise companies have also fallen. The fear is people won't have enough to spend on vacation, and they're facing a double whammy because they have higher energy prices as well.
Another sign that was not very comforting was that good news was bad news. Good earnings weren't saving a stock this week.
Yeah, so you take a look at Micron this week, right? Micron, very impressive earnings. Of course, we should caveat this. The stock was up 300% over the past year going into the print, so sometimes you see stocks sort of sell off. But one thing, when I was speaking to investors earlier in the week, and they're saying, you know, we'd maybe position in tech here, maybe there's some opportunity in tech off the bottom. The question is, where's the bottom, right? And you're going to need sentiment to sort of come back. And I think Micron earnings sort of show you that we're not quite ready yet.